The daily video you are about to watch will require a paid subscription to wickedstocks.com beginning Tuesday, March 1st. Become a wickedstocks.com premium member to continue receiving our daily SPY report, our daily Triple Q report, our weekly DIA, IWM, and Bitcoin reports. Monthly subscriptions start at $25 a month. If you're not ready to become a premium member, I encourage you to become a basic member for free, which will alert you once these analysis videos become part of our paid subscription plan on March 1st. We will continue to offer free and valuable content on YouTube, though it will not include the series of videos mentioned earlier. We hope you become a wickedstocks.com premium member. We offer a 7-day free trial, and cancellation is allowed at any time. Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily SPY report for Tuesday, February 22nd, 2022, President's Day week. Please click like each and every time you watch new content that is uploaded to the Wicked Stocks YouTube channel. I know that the daily SPY, Triple Q, the weekly DIA, IWM, Bitcoin are going into a paid format next week. We will be offering continued valuable content on the Wicked Stocks YouTube channel. I don't know exactly what yet. I think it'll be kind of supplementary. Crude oil, gold, NASDAQ 100 index, S&P 500 index, Dow Jones Industrial Average index, the actual underlying indexes, I think we'll put out, not on a daily basis, but enough to keep you abreast of what's going on. Obviously, our desire is that you become regular paid subscribers, as you saw in the preceding segment. I won't belabor that subject. We'll be talking more about it as we continue in the week. And once again, that starts actually a week from today. Let's take a look at the charts. Big picture here. This is probably something you're familiar with from last week if you've been watching the Daily SPY report. We are on the defensive, if you will, below 453.64 into later March trade, holding below that descending channel top. We'll keep long-term support, presently at 402.99 to 405.60 in reach. Over the next 3 to 5 weeks, possibly sooner. That sooner would come with a daily settlement below the January low of 420.76, and then we may be as little as 3 to 5 days away from reaching that lower support area where we can place an annual low. But this sort of summarizes both the mid and long-term outlook. Midterm 3 to 5 weeks, we remain on our heels below 453.64, and I think 420.76 is likely. Over the next 2 to 3 weeks below 453.64, possibly sooner. This is a kind of a zoomed in image of that 420.76 floor, if you will, a floor of support that can contain weekly selling pressures, and 453.64, that descending channel top that spans several months that can contain buying through March trade, perhaps. Now, in the immediate vicinity, I'm going to cover the downside first, and I'll get to the support and resistance after this slide. We've got 435.34. That is the low from about a week ago that we settled below on Friday. It is an intraday resistance level, can contain initial buying pressures, assuming we open below it, and below which that trend line off those lows following the early February high is our, I'm going to call it an intraday target. It can contain session weakness. And if we close below 420, well, I'll get to that in a moment. Let's take a look at the support and resistance. Here, you've got the 435.34 resistance. That green line, horizontal line, once again represents roughly where we closed for reference. On the way down, we've got 431.24 still. Now, I had that as a session containment level last Friday, and I've lightened up on it because we're close to it now. In the overall scheme of things, it's nothing really significant. It is actually the low settlement price on the move low. But I think it's quite vulnerable to violation today. And if we break 431.24, then we should test that 428.27 trend line on an intraday basis, where once again we can place a daily low. Now, if we close today below 428.27, I think tomorrow we should test 420.76, which can contain weekly selling pressures. I'm not giving it any more credit than that, if you will, in terms of its containment ability. I don't think we'll double bottom there through March trade. We could, of course, perhaps double bottom there and rally up into that 450s, that 453.64 descending channel top within several weeks, we could fill that wedge out perhaps through March. But I think given the continued concerns with regard to inflation, war drum beats in Ukraine, a lot of uncertainty in the air, crude oil prices that have backed off from their long-term resistance. I haven't shown that in this video, but I did put out last week, if you've seen it, a kind of a longer-term study of West Texas Intermediate and COMEX gold. So I hope you've seen that. Anyway, closing below 420.76 is certainly in the cards, if you will, over the next couple of weeks, possibly this week, depending on what happens internationally. And if so, then I think with that kind of a heightened volatility, closing this week, over the next few days perhaps, below 420.76, should then yield that 402.99 to 405.60 area within a matter of days. I'm going to say 3 to 5 days, where we could place an annual low. This is a significant long-term technical support area, not only an extreme channel bottom, but also a rising two-thirds speed line that is projected off that March 2020 low against the recent high from last December. So trend-defining elements, both of them, significant long-term support, able to contain annual selling pressures. And yes, we would have a significant sell signal longer term if we were to close below it. I'll certainly apprise you of those targets if we violate this lower area, certainly as we approach it. Let's talk upside with regard to support and resistance. If we push or open today above 435.34, that low area from about a week ago, then 441.87 is in reach. And that is represented by that horizontal line here on this daily chart. That is a 3/8 upside Fibonacci retracement. I don't have the A, B labeled here, but the A, the high of that Fibonacci retracement, is the early February high, and the low was Friday's low. That is as low as we've been since the February high was put out, and so 3/8 back up is 441.87, and I think if we push or open today above 435.34, 441.87 in reach, where we can place a daily high. Now, if we close today above 441.87, we should test that 447.81 short-term, near-term descending channel top tomorrow or the following day, however you want to put it. Closing above 441.87 indicates 447.81 the very next day. And given the shortened week, that 447.81 descending channel top can contain buying through the balance of the week. And from there, we can rotate back to new lows, new move lows following the February high. When I say new move lows, I'm talking Friday's low was a new move low following the February high. So, the early February high, I should say. So once we test 447.81, that channel top, I've got it as a 2-star resistance. In other words, can contain 2 to 3 day buying pressures, and that could be for, through the rest of the week. And from there, we could fall off within 3 to 5 days to new move lows. But closing above 447.81, certainly not going to happen today. But if we did close above that formation as we continue into later week, then the 453.64 channel top is likely within just another day of activity. As I say, 453.64 able to contain buying through March trade, and below which this market remains, I'm going to just say, kind of in a lower low, lower high sequence of trade following, excuse me, the late December high. There's other ways of phrasing it, where we remain on the defensive into March trade below 453.64, anticipating that 420.76 low from January over the next few weeks, possibly the very low 400 area by the end of March, and then closing above 453.64 would merely indicate within a week, two at the very most, that 465.69 rising channel top. So as I've been mentioning, the upside technical dynamic is very stair-step. I do like to swing for the fences, as I say. I like to provide big picture, longer term objectives, but they need to be reliable. And if we close above 453.64, could that be a good Q1 low? Perhaps. Into Q2? Perhaps. but we could just as easily top out at 465.69 through the balance of March trade and then fall right back again as we continue into April. So it's really not until we close above 465.69 am I confident in predicting not only a test of that 479 and change December all-time high that you can see in this chart, but it's not labeled. But also, I think into the low 500 area, when also not illustrated today, is a long-term trend line projected off the highs going back to August of 2020 that has performed nicely since the September high. We reapproached it again last November and December, so it's held nicely. And if we were to close above 465.69 in the coming weeks, then the low 500 area becomes a realistic 3 to 5 week target. But we're a long way from that right now. I think I've kind of summarized it. Here's your support and resistance for today. Please click like each and every time you watch the Daily Spy Report. Consider subscribing next week to the Daily Spy Report. I think we've got it reasonably priced for the product that we're offering. It's not a leader price. I don't anticipate raising that price anytime soon, and would love to have you come on board. Cancellation is allowed at any time. So if you reach the conclusion within a month or two of subscribing that it's just not for you anymore, so be it. But I have a sense that the more you use it, the more you'll want to use it. It could become a regular part of your strategizing for SPY trading. I'll leave it at that. You have a great day. I'll be back tomorrow for Wednesday's Daily Spy Report, and we will talk soon.